we pick time to study, and there are the 4 ticks within a time period that we pay attention to. All right? All right, when the first trade takes place, the first buy and sell, the opening tick, okay, marks the new period. This is a neutral starting point, as we just discussed. Now from here, anytime there are more people who want to buy the stock than who want to sell it, the price will go higher. All right, it's supply and demand, guys. I don't want you guys to say there's more buying than selling in the market. All right, it's not a true statement. There is more buying pressure than selling pressure in the market that drives price higher. The demand is greater than the supply. More people want it than want to get rid of it. Price goes up. Okay? When there is more supply than demand, or people don't want to pay the current price, they want to pay less, and a lot of people want to sell it right now, there's a supply pressure, there's selling pressure in the market, and price will go down from the opening tick. All right, so if this was 2 minutes of trading or an hour or a week, it doesn't matter. All right, it doesn't matter. It just shows us where the pressure was coming from. All right, so we have an opening tick, and then above that we're bullish. We have an opening tick, below that we're bearish. Okay? 80 to 90% of the time you will get follow through of this color if the bar is a nice size, healthy bar. All right, so the opening point, and then what happens after that. Now, when a bar finishes, let me go to the next slide. When a bar finishes, all right, it will have the 4 key points to that time period. All right, you will have the open. The low point of the period will be marked by either the open, or if it traded down a little bit, you'll see that little wick. You will have the high, right? Then you have the close. So the 4 main ticks, guys, are the open, the high, low, and then the close. So on this bar, we opened, traded up a little bit, marked a high, came all the way down, made a low, and then closed a little off the low. So when you have a solid green bar, the bulls win. The buyers were in control for that time period. A solid red bar, the bears win. Okay? So they controlled this period. Doesn't matter, 2 minute, 5 minute, daily, hourly, whatever time you selected, that's who was in control. Now, the way you maintain or gauge if they maintain control was the 55%, a little over half. Whenever you have a solid bar, okay, the people that created that bar to show they are still in control, to show they are still the ones with the power, they need to maintain at least 55% of their most recently completed bar. What you're looking for is the follow-through. You know that when you see nice, healthy size bars, you get follow-through. Okay? So once you have this scenario, bulls win, bears win, your expectation is the bulls will win the next battle. Your expectation is the bears will win the next battle. All right, so now the next time period opens. Okay, we close green, and here we are near the high, and we just open the next time period. So guys, my question for you, when this happens right here, is this a bullish event? Okay, now we have some retakes in here, so they've been through the drill, and we have some new people in here. Guys, listen, when you open, right, remember this first slide? Remember this? The first period is neutral. Okay? So just because I got a green bar, when I open near the high, that is not bullish by itself. You have to wait and see a little follow through. When this opens, it is not bearish by itself. Okay? We need to see we anticipate there should be some follow through, but we want to be shown the follow through. Okay? We don't just jump right in yet. We have to see a little bit of follow through. Now we have a bullish event. Okay? We closed green, we opened, showed a little bit of green, now you buy the stock. All right? We closed red, Open shows you a little bit of red. Now you're a seller of the stock. Okay, not at the opening tick, but as soon as you see that little bit of continuation, a little bit of the power that was in control shows you they're still in control, you act. All right, and your point of being wrong, okay, once you make a commitment, your initial point of being wrong is the 55%, because we already said to maintain control, they have to hold this line in the sand. So once we see the confirmation, we can go long and we say, look, if they get back here, we're out, right? We can short as soon as we see some red. If we get back here, we're out, okay? All right, now as we get the continuation, okay, when we see that that little bit of green started to continue and the bulls are showing that they're still in control, all right, we can then move our stop from the prior bar, okay, to the entry bar. And now we say, look, we have enough green here that if we lose all this green, we don't need to wait around for this anymore. This is enough, we're out. And guys, this is your introduction. This is the first phase. So what's enough and how much, we're going to get to all that. All right, this is just the basic overview. So there's no numbers being discussed yet, okay? You're going to move your stop to the low of this bar once you have enough green and say, good. Now, I basically have a risk-free trade, right? Now it's the market's money. If it stops you out, you're talking a penny or two, big deal, okay? Solid red bar. Opens, shows you a little bit of red, you go short. The red starts to grow, you get enough red, stop goes to the entry bar's high. Risk-free trade, market's money. If you're wrong, you're talking pennies, all right? Talking pennies. Guys, the 55% is of the entire bar, okay? The entire range of the bar. So if this is $1, right, then this would be a loss of 55 cents of the dollar, all right? Okay, now, what do you think, based on the pattern we've just seen? We said solid, nice solid bar, 55%, a little bit of green we bought, a little bit more green we move the stop to the entry. Now, what happens when this bar becomes like this bar? What do you think we're going to do with a stop? Yeah, we're going to just keep walking this thing up the bar. We're going to repeat the process. So now, solid green bar, guess what? Stop goes to 55%. You now have a profitable trade underway. Not going to lose at this point, and you watch the market to give you more green bars. All right? Solid red bar, open, a little bit of red short, more red break even, nice solid red, 55%. So you're locking in profit and just following the path of least resistance, where the money's going. Guys, bars are footprints of money. Okay? They can say whatever they want to say on TV, right? Oh, we're going to dump the stock and we have a price target of this on this stock. Then you look at the chart and you see nothing but green or red bars, you know where the money's going, right? Bars are the footprints of money. They can say anything, but they can't hide the fact that they're either buying or selling in large quantities. They just can't. So you just look at what's given to you and you know who's in control. You know, are they really buying or are they really selling? All right? So that's the basic premise of reading bars. All right, so now let me go through two scenarios with you. I want to take you through a scenario where it's a current bar that's in power and then losing power. And then I'm going to go through a scenario where it's a secondary bar. All right, so the first scenario is a current bar. All right, we are in full control. We're dominating this bar, right? And this could, guys, this is still forming, right? Bars, unfortunately, on the weekend in a seminar, we can't make the bars move. So you're watching this bar. It opened, dipped a little bit, produced a nice size, solid. Remember, this was solid green up here. Came off the highs a little bit. And at this point in time, mentally, you have a stop in your mind that, look, this just produced a nice big green bar. If this were to give up more than half of this, I'm going to say the bulls are not in control. Solid red bar, if I start losing more than half, we're not in control. Which is why you want the nice size bars. And you'll see what this means when we get into the charts. right? Not little tiny bars. They can go green to red in a blink of an eye. So we want the nice healthy bars. So if we start losing green and if we start losing red during the formation of this bar, we start to question how much control do they really have. So if our solid green bar that we had with the little tiny wick starts to lose a little bit more green before the close, right? Remember, we were here, solid green. Okay, we were here with solid green, and now we're here. And we're losing a little bit of green. Okay, solid red, but we lost a little bit of red. We're still in good control as long as we maintain our 55%. And guys, these 55% lines are skewed a bit to make it really visual for you. If we put it right at 55, then people are like, well, is it really half or a little more than? So visually, we are making it where the 55% is clearly more than half. Okay, so I don't want you out there trying to measure this and say, well, it's really like 65. Visual, it's a visual thing. When it's a live chart, you can actually click your candle, take the high-low measurement and say, all right, it's a 30-cent bar, so if I lose 20 cents, good enough for me. Or if I lose 18 cents, good enough for me. All right. Weak control, we have lost a good portion of our green. Okay? We have lost a good portion of our red. Now, because we're losing green, guys, this means that the bears are starting to push back. We were green. The bulls ran it all the way up, and then the bears came in and said, no, don't think so. And they started pushing, 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 pushing. And they knocked a good portion of your color out. Okay? The bulls were getting pounded, and they said, no, this is it. We're going to fight back. And they start pushing, pushing, pushing. Okay? So yes, the bears are still here. The bulls are here. But they're not as convincing. They're not up here solid. It's weak control. All right? Once they've lost more than their 55%, they have lost control. So the bulls, which once were standing proud, standing strong, look at us, big green bar, we own the stock, they just lost control during the same bar. Okay, the bears making a big statement, pounding on the bulls, dominating, looking like they're going to crush the stock, and all of a sudden, bulls make this valiant comeback. Right? So once you pass that point, you've lost control of the bar. Right. Now, if they can actually take 100%, if they can do this to the bar, if they can erase the entire bar that used to be, you now know that it is totally over. The dominance has traded hands. The other side has stepped up. What once was a solid red bar has been 100% erased. They took it all. Right? They didn't just take half. They didn't just take two. They took it all. It's over. Okay? That is the passing of the baton, the change of, oh, here you go. We're done. We're sorry we got in your way. It's over. Right? This is like the big kick in the stomach, knocked them down. Right? Now, if they actually can print the next color, guys, all right, if they can actually print, Denise, it doesn't matter. It's the same thing. When I say they're pushing back, the selling pressure, Denise, the selling pressure, okay? So it doesn't matter if it's new shorts or if it's old longs selling, right? On buying pressure, it doesn't matter if it's new longs or short covering. Buying pressure is buying pressure. Selling pressure is selling pressure. It's no different. The people get confused. Well, is that short covering? Doesn't matter. Shorts buying or new longs coming to the market, it's all buying pressure, okay? All right, when they get to this point, okay, and they can actually put the next color into the bar, that's like the stamp of approval. That's like, first they kicked them in the stomach, knocked them down, right? Now they're just going to step on their throat. They're just going to put their, you know what? Not only is it over, guys, but it is forever. We have just marked this territory forever, okay? Broke their backs, it's done. So you had solid green, erase the green, and then print red. It's it. You think forever. The price will never again in its life see this high, ever. Okay? When you had a solid red bar, and the bulls come back and take it all back and then print green at the close, they have just taken the bears out of the game forever. Right now, realistically, guys, you know that's not true. There's no way it's never going to see this high. But what I will tell you is, depending on the time frame you're on, forever can be, for a day trader, forever can be a long time. When you see this event on 15-minute charts, it can sometimes be the rest of the day. Okay? Now, if you saw this event on a 2-minute chart, it might only be the next half hour or so, or the next 20 minutes. I have seen this on a 2-minute chart, believe it or not, go for the rest of the day off of a series of enough run-up. But, you know, forever is relative to the time we're on. But I want you to believe it so that when you see this, you don't hesitate. When you see these events, you take advantage of them. But they lead to incredible opportunity. So forever is what we think. Okay? All right, now, that was within the current bar, right? A current bar, losing control, lost control, forever gone. Now, the same event can happen with a second bar. It doesn't have to be the current bar. So let's go back again and start over with a full green bar, full red bar, right? So we're in control. 55% marks the line in the sand. If we lose this on the next bar, it's the same event as if it happened during the bar, right? Because guys, remember how this looks. When you have, all right, let me go back to the slide for a minute. When you have this event, okay, when you have this event, solid green, and then they lose the green, if the computer could print this, right, with color, what color would this tail actually be if it was showing you a bar? What color would it be? Exactly, guys, right? This would be a big red bar sitting on top of a little green bar. It would visually look to you like, wow, man, that's like all red almost. There's just a little bit of green there, right? This whole color is green. So you look at that and say, wow, that's pretty good green bar. There's just a little bit of red in the way. And it visually might appear different to you. So when you see this event, the reason you think totally over is really, if this was printing color, what would you now have right in front of you? What would you have right here? You would have a solid red bar. Yeah, Stephen. You would have a solid red bar. You would have the exact opposite of what you started with, right? We just said that when you have a solid red bar, the Bears are in control. A solid green bar, the Bulls are in control. And look what we just did. We took the solid green bar and in one fell swoop erased it and left behind this tail, which is really a solid red bar. You just did a complete flip in the current bar. That's why you think totally over, because you know this is a big red bar now. The Bears have the control, right? The Bulls took the red bar and flipped it. Solid green bar. They're in control. Okay? The Japanese candlesticks, they call these shadows, right? If you read the authentic, the first candlestick books written, these were called shadows because it represented what once was, right? It was a green bar. Now it's just a shadow of a green bar, right? So they refer to them as shadows. We call these tails, but they call them shadows, right? Oliver's actually said he wished he could get a charting software that would not print these shadows, but that would actually just always be colors. So you would either see a bar that was, you know, this would just be a solid red bar. Or if you had a bar that had the weak control, you'd see a lot of green on a little bit of red, or vice versa. Right? I don't know if anybody will ever develop that, but he thinks it would help traders visually remind them of who's in control. I think once you see these events enough and you understand this concept, visually you can see these and go, wow, that's a big red bar, this is a solid green bar. And you'll learn to play these appropriately. Okay? And guys, what happens is this, you know, you have to do enough trading to understand when you look at a chart, it's relative to the time frame you're on, and it's relative to the size of the bar. I can't tell you that 20 cents is a solid bar, 50 cents is a solid bar. I don't know what stock you're trading. If you're trading Google, I'm going to tell you that 50 cents is a joke. It's nothing. If you're trading Intel and you ever saw 50 cents in one bar, I would tell you that's going to probably be a record, right? To see 50 cents in an intraday move in one bar on Intel. That would be just devastating. So it depends on the size of the stock, the price of the stock. What you do for that point in time on that day is you look how the stock is trading. And then these things become relevant. They jump out at you, right? During that day, you'll say, wow, this for the day, this is the biggest bar I've seen, and it just got erased. As I said in the beginning, it's not any little tiny bar, okay? Healthy control. All right, so now we have bulls in control, okay? Bulls in control, right? And now we're getting a little bit of red. We wanted follow through to the upside, right? We wanted open and more green, okay? We wanted open and more green. Here we have a big red bar. We want open and more red. It's okay if we don't get it right away. You didn't buy the stock yet, right? You opened and you needed to see the green and you didn't buy it, so you're waiting. This is a normal event. When an uptrend, you will see this happen often. A bar will open, it'll dip a little bit, right? Then it'll go, right? So it shows you a little red and then takes off to the upside. Okay, when you get the little bit of red, Oliver calls this a squat. You got to give the room, and that's why you do this 55% thing. You got to give the stock a chance to squat or bend or get ready, right? When an athlete jumps or a dancer leaps, they squat then jump. So when this happens, it's really not a big deal. You just have your line in the sand that says, look, if you start to squat and you fall down and trip over yourself, right, then I don't want to deal with it. So this is your line in the sand. If the squat turns into a drop or a trip and they fall, you already know where you're going to get out. So this is okay. This is okay. Good control. This is starting to get near that halfway point. So during this formation, this bar is now showing weak control on the follow-through of the next bar. The bears are getting stronger, right? This prior bar is full of buyers, and they're now looking at this saying, huh, that's not what I was expecting. Okay, same over here. We had a big bar full of sellers. Now the next bar, they're starting to show that they're taking over. So this is a weak bar now. All right, once we pass the 55%, okay, we say that we have lost control, right? The bears have just taken out this bar, took more than half. Bulls have lost control. So you're out. If you were in this bar, you're now out. If you were waiting to get in on the follow-through next bar, it never happened, and now you're changing your bias a little bit. Okay? You were short. The next bar open started to go green. You're like, well, okay, I didn't short because I never saw the red, and now I have to start thinking about changing my bias. The bulls have pushed back, taken more than half of my bar. Right? If they do it, just like before, if they take all of it, it's forever. Okay? When you see this pattern, a solid green bar, and the very next bar takes it all out, forever. Okay? They own it forever. Price will never again visit this high, ever. That's what you think. Okay? When you see a solid red bar, immediately the next bar opens, takes out all the red. I want you to think, and I want you to play this, that the bulls have it forever. Because guys, think of what's happening in the psychology of this bar. Okay? In the psychology of this bar, all these buyers, all these longs, instantly in one bar, they didn't even get to think about it. It wasn't like it was a couple bars later, and well, maybe there's going to be some support. It was just like, I bought, I was a winner, the next bar opened, and all of a sudden I'm a loser. Right? Just like that. One bar, boom. Winners, losers, instantly. Okay? People that got short in this bar are instant winners. So you have shorts really excited that they're winning, and you have longs really nervous that they're losing. This bar got a reward immediately for shorting. This bar got punished immediately for buying it on the next bar. So the emotional switch is big. That's what produces such strong moves off of this. Okay, same thing here. Shorts got squeezed on the very next bar. New longs are pumped up. There's going to be follow through. And you will think, and you will play, this follow through is forever on the rest of this chart. Because the moves are big when this happens. Right? Now it has to be, guys, we're going to show you some different bars here in a minute. Like I said, it's not just every little tiny bar. Scott, do you have to worry about the time? No, Scott, because we're not waiting for the bar to close. Scott, let's say this is a 2-minute bar right here, right, and I close green. Even, you know what, I'll give you a 5-minute bar. We'll just go 5 minutes. I open, close green, 5-minute bar. The next bar opens, and in the first 30 seconds, it goes solid red and wipes out the green. You do not stick around for the next 4.5 minutes to wait and see if that event's going to hold. Because, Scott, what if in the next 4.5 minutes, the red bar is down here, right? So time is irrelevant. When the event happens, that's when you make your decisions, okay? When the event happens, and I'll tell you what, Scott, if I had a solid green bar and the very next bar I open and go solid red in the first minute or two, that's a strong move, right? That's a really strong move the other way. That means the minute this bar closed, the Bulls thought they had it, and the Bears said surprise and just crushed them instantly. Okay, because strong green bars, if they're really strong, even if this event happened, if this was truly strong, this should take more than the first 1 minute of a 5-minute bar. It should take the Bears a while to stay here and start trying to short it, and then the Bulls have to think about it. Okay, maybe we shouldn't have done this, and then toward the end of the bar, it starts growing. But when it happens immediately, it's even stronger. All right? It's even stronger. Okay. Okay, so this brings us to the first market law, all right? The first market law. Okay, based on Isaac Newton, right? Guy was a brilliant scientist, and one of his laws in the universe was the law of momentum. Okay, and things will continue to act in a certain direction until an opposing force acts upon it. That was Newton's law. So, okay, the object in motion stays in motion until an equal or opposite force causes a reaction. So what we say is, look, guys, as long as we're in a moving market, okay, the market has to be moving up or down. We don't care, just moving, right? Just give us volatility. We will get follow through, okay, of the most recently completed color bar 80% of the time, as long as you've maintained color. As long as you have that solid, strong, sizable bar, you should get continued follow through. All right? So if we get one solid green bar, expect another 80% of the time. You get a solid red bar, expect another 80% of the time. All right? The bigger the bars get, and you're going to see when this is relevant, guys, right? This is, the bigger they are, the more solid they are, it goes almost 90%. Okay, almost to 90%. A little bit of a green, a little tiny bar is not automatic. Doesn't mean it's going to give you a bunch more. Now, these are beliefs, right? We call this one a law. And guys, with any law, there's an appropriate time to break the law, right? If you have to rush somebody to the hospital and it's a life or death situation, you don't stop at the stop signs. Right? You slow down, you look, and you go. You get to a red light, you look, and you go. So there are appropriate times when you're going to break the law. But for the most part, you're going to adhere to this, and we'll teach you when not to believe this. Right? But for now, green bar, you think more green. Red bar, you think more red. All right? Now, the nice thing is this, okay? The nice thing is this. When you have a new language to learn, okay, when you have a musical instrument to learn to play, there are languages have words and music has notes, right? If you try to learn to play the piano, there are 88 keys and there are unlimited amounts of chords and notes that you have to learn to play. You want to speak a new language, all the vocabulary words that you have to learn just to learn to start to speak it, then you have to conjugate properly with the verbs, and you have to know the different grammar, and it can be pretty in-depth and pretty complicated. Now, trading the market, right, does not have to be that difficult to learn the words or the notes. Okay, putting it all together is where you're gonna come in and find it to be a challenge. But understanding the building blocks can really be this simple: that there are only 13 bars that the mark. Those of you that don't know me,